Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's May 23rd, 2023. It's a beautiful Tuesday morning down here in Nicaragua. You may recognize that big, colorful picture behind me. This is my little makeshift studio when I'm down here in my second home. We got a big show coming up for you because we got a heck of a week coming up as well. The markets are moving. We had some breakout last week to the NASDAQ 100 to a new 52-week high. We'll talk about that. And what about artificial intelligence, folks? This is one of the hottest topics on the street right now, and really anywhere, even down here in Nicaragua. We're going to talk about AI stocks, how it's affecting the market, and potentially some opportunities out there. All that and more coming up right now on Making Money. Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions. He just gave them a dire warning. Mark says, we're about to witness an historic stock market shakeup that can soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history. And he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash2023.com. He includes a name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of the beloved pet brand Chewy before it fell 45%. Tech company C Limited before it fell 66%. Furniture company Wayfair before it fell 76%. Social media favorite Snap before it fell 36%. And food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the FANG stock fell 35%. So you'll want to avoid the stock in this new report immediately. Again, simply go to rollingcrash2023.com for your free copy of this new report. Again, this is Matt McCall. Thanks for joining me. And this is, of course, Making Money. And as I mentioned, it is about the third week here in May. And it's amazing how time flies. We're getting close to the mid-year point of 2023. As you know, last week I did a show talking about some trends for the second half of 2023. One of those trends we will talk about today, and this is a trend that is already hot as can be. Some people are really calling it a bubble, which I just find absolutely insane because this is a trend that is going to be worth most likely trillions of dollars throughout the global economy in the next decade plus. And of course, I'm referring to AI, artificial intelligence. So we'll talk about that in a bit. Before I jump into that, I want to take a look at the markets because, as I mentioned, we've had some movement here. We'll take a look first at the S&P 500. Here's the SPYs. And we're taping this very early Tuesday morning down here in Nicaragua. It's about 8 a.m. Eastern, 8 a.m., I should say, Mountain Time, and about 10 a.m. Eastern Time. So about 30 minutes into the trading day. We have the S&P down about 0.25% right now. But as you can see on the charts here, we're just a couple days off a multi-month high. We've been consolidating, going sideways for the majority of the last few months. And this is actually a really good sign for me. You know, there's several ways to look at stock market. The most popular is what's called fundamental analysis. That's when you're looking at the valuation of stocks, the amount of money it's making, how big it is relative to the amount of revenue it's bringing in, how much cash is sitting on, etc. It's the numbers, really. Another way to look at it is technical analysis, also called charting. And that is looking exactly what we're looking at right now. This is a Japanese candlestick chart. So instead of showing lines and just a little dot for every day, this shows a little candle. It shows the high, the low, the open, close. I'm not going to get into that right now, but that's why they show that, and that's why there's different colors. So when it comes to the charting right now, technical analysis, it's an extremely bullish pattern. We bottomed back in October, so we're now about 7 months off that low of the bear market. And there's been so many statistics that have come out from so many different Wall Street research firms showing that when the market is at least 6 to 7 months from a low, it's very rare that we actually go back and test those lows. It's also very rare for the market to be down 12 months from now. And again, I think we're setting up for potentially a continuation of this let's call it a bull market. Let's call it the rally that we've had since October. I don't see anything really slowing this down anytime soon. Of course, we do have another Fed meeting coming up in June. Just about a week and a half ago, the odds of the Federal Reserve and Jerome Powell, the chairman there, raising interest rates by 25 basis points, the odds of that were essentially zero. The market had priced in the Fed pause. That number now is upwards of, this was as of Friday, about 25-30% chance that a 25 basis point hike, meaning in increasing interest rates by 0.25%, is now not likely, but much more likely. And we're not quite at a coin toss yet, which would be 50%, but we're getting darn close to it. And all that being said, the market's still holding up. And again, that's the headlines. That's the psychology of reading it. But if we look at just the charts, our charts are telling us the market's holding up. So another chart I want to look at here, that was the S&P 500. This is a NASDAQ 100 ETF. The QQQs is a symbol, QQQ. And you can see here the QQQs rallied to a new 52-week high last week. We're down about a third percent, 0.3% or so, give or take, this morning. So a little bit of a pullback after on Friday hitting the best intraday level on the stock on the Qs since mid-April. So a 13-month intraday high. That's impressive. And you can say anything you want, and the bears will continue to talk their BS as they've been doing for 100 plus years. The bears don't stop talking. It's just what they do, because if they can try to convince you that there's something fundamentally wrong with the economy, with the geopolitical situation, with the world, with the stock market, etc. And yes, we do not live in a perfect world, folks. That being said, there's a lot of strong fundamental reasons that the market will continue to move higher. And there's a lot of strong technical reasons, as I'm just showing you this chart right here, that we actually just broke out again to a 52-week high. That's a good sign. Breaking down to a 52-week low is the exact opposite. We did that in October and then turned around. We tested again basically in December, January, and we've rallied since then. So again, that's kind of where we sit with the charts right now in the markets. Nothing goes straight up. I'm not saying we're going to go straight up from here, but I'm saying the path of least resistance in the intermediate term, meaning next 6 months or so, to the long term, remains up. The path of least resistance remains bullish, in my opinion. All right, so let's talk AI. And I could do an entire series of podcasts on artificial intelligence and AI. And there's just so much to talk about. It's going to upend so many different industries. And I don't think even myself, who I've been researching AI for over a decade. I mean, I've said for many, many years, Google, Alphabet, whatever you want to call them these days, is basically an artificial intelligence company. They've taken all your search history, they've taken all this information, put into a huge artificial intelligence system, and from there have figured out algorithms to make a ton of money. So to me, it's driven really by artificial intelligence. People say, well, it's a search engine. You search, but why do you think when you type in 2 letters, it knows exactly what you're thinking? Because it's using artificial intelligence to come up with that. Some broad numbers here I think we need to look at first. ARK, which runs the ARK Innovation Fund and all the other ETFs, their head, Kathy Wood, pretty well known in the finance world. ARK came out with their annual Big Ideas research paper they do every year. The one for this past year, they said when they talked about artificial intelligence, that it could add $200 trillion to the global economic output by 2023. I'm not saying it's going to generate $200 trillion in revenue, but add it to the global economic output because of increased production, which we'll talk about in a second. The report went on to say that software companies in this industry, in the AI industry, could generate, though, $14 trillion in revenue between now and the end of the roaring 2020s, end of the decade. $14 trillion. That's in pure revenue. That's not just economic output, that's revenue. And again, one more number, ARK believes it will give the enterprise value to this area about $90 trillion. And the reason these numbers are so big, potentially could be so big, is due to productivity. And I know many of you have probably played around with GPT, and their search engine, I guess you will. of how you could just type in, natural language questions and boom, pops out this amazing answer. I will tell you, I've started playing with it a lot more in the last week. A good friend of mine down here in Nicaragua, he's a big tech guy. He's explained to me how to use it really for business and to help me with research because, as you know, we have two newsletters in my name that we give out, um, 25, 30, 40 pages a month for each one of information, plus a daily email that we send out every day the market's open. So there's a ton of research. My research team, we're constantly doing research to come up with new ideas, especially with the niche area I'm involved in, which is innovation, looking for the next big thing in the stock market, in the economy, in the world. It takes a lot of research to do that. And it's amazing how using Chat GPT over the weekend, doing some research, how quickly sometimes it can come up and help you find things. It's like Google on insane amount of steroids, really. It's how quick and how fast and how powerful it is. And to me, we're still in a very early stages and it's only get better and better. It is going to upend the world and it will increase productivity. And of course, the big concern, right, is jobs. And one of the stats came out and said 6 out of 10 workers will have at least 10% of their work's tasks impacted by GPT technology. I think that's actually low. So it's saying 6 in 10 will have at least 10% of it. Um, I'm going to fall into that category because as a newsletter writer, as a newsletter researcher, as a podcaster, as a speaker, and all these things, ChatGPT will help lower my task level and increase my productivity, without a doubt. 2 out of every workers will have over half of their tasks directly affected by Chat GPT. And you think about, I don't want to talk about really specific um, really jobs out there because I don't want to make anybody scared. But there's certain things that that we could very easily have Chat GPT and AI do your job. And that does not mean you're going to be out of a job. It probably just means it's going to be shifted. I mean, you think about go back to the 80s and 90s, before the internet was really prevalent, when computers were still just big machines that didn't do much other than maybe word processing. Um, Once that changed, just think about the average office executive or executive assistant. What they used to do back then was, and this is nothing against that job, but they'd go get coffee, they'd go order lunch, but they weren't ordering it online. They had to actually walk over and pick it up and go do things and make sure all the pencils were there and everything was nothing was really done with the computer. Wasn't You couldn't go to Amazon and order pencils to be delivered tomorrow. You had to call up the local place and get your writing utensils. I mean, this is a very simple explanation. That being said, that office assistant from the 80s to the office assistant today is completely different. Everything's done on a computer. Everything's done through email. You're not really calling many people these days. Everything's done that way. Automatic. Boom. We need more paper tomorrow. Boom. Amazon will have the crate ready for you tomorrow morning. So that job did change dramatically and probably scared a lot of people back then. But what it did, it became more productive and the job was still there. It was just a bit of different. So that's how I see this kind of playing out. And speaking of productivity, Kathy Wood of ARC said that she believes AI should increase productivity for knowledge workers by more than fourfold by the end of the decade, by 2023. And again, I'm a knowledge worker, and I think once I learn to use this more, which I'm teaching myself and taking lessons on how to learn AI and incorporate it into my business, it very easily, especially as the technology gets better in the next 7 years, there's no doubt it will raise my productivity by 4x, if not much, much more. So again, I could do a show on AI, and like I said, an entire series on AI, but I just want to concentrate on one area today, and it's a pretty niche area, and this is the healthcare area as far as artificial intelligence is concerned, and more specifically, drug discovery. But one really neat thing before we get into the AI drug discovery, I read an article earlier this month that Cedars-Sinai, they announced that they believe that artificial intelligence can help detect heart attacks, if potentially death coming from that, and even urgent treatment that might be needed right now. And many of you know I had my personal doctor come on, Dr. Carlsberg, maybe about 2 months ago. It's a great show if you've missed it. We showed a 3D picture of my actual heart. And then he sent some of that stuff off to a firm that used AI to try to can tell basically where your heart's going to be in the future, and if you're at high risk for certain types of heart disease, etc., heart attack. So this is something that's already here. They're in clinical trials right now for this specific company, a specific technology that they created at Cedar Sinai. But there is big upside to that potential of saving lives. And obviously, heart disease, one of the number one killers here in the United States, and that would be pretty amazing if we can nearly eradicate that based on technology and innovation. So let's take a look at AI drug discovery, and it's pretty simple if you think about it. To discover a drug, it's very costly, takes a lot of time, and your success is really low. So to give you some numbers, bringing a new drug to market historically costs about $3 billion. It takes about 10 plus years, and about 90% of the experimental medicines fail. And so you have like a 1 in 10 chance. And I think that's a little high. You can look at this number a little bit differently. These are ones that don't make it to a certain level, phase level with the FDA. So I think it's actually much lower than 10% that actually make it. But again, 3 billion, let's call it 1 in 10 make it in about 10 years. So big undertaking, to say the least. And, by using uh, artificial intelligence, this should cut that in half initially, and then much more. Costs obviously get slashed with that. Success rate goes up dramatically. So it's going to help all three of the issues that you have with coming up with drugs right now. Morgan Stanley believes that over the next decade, that the use of AI in early stage drug development will translate into about 50 different novel therapies worth about 50 billion in sales. Again, I think that number is low. I think that number could be much higher. There's a research firm by the name of Deep Pharma. They estimate that investments in AI-driven drug discovery companies that it's tripled over the past 4 years, now to $24.6 billion. And I can show you a chart here of this. So you can see, I mean, it was really non-existent in 2020, 2012, 2013. It's only 10 years ago. And look where it is now. I mean, that's just, again, this is such a new technology, folks, that it's, I can't fathom where it's going to be. So I think the average person who hasn't read a ton about artificial intelligence in the healthcare industry has no idea how this is going to look and how it's going to honestly change your lives, your family's lives, your friends' lives for the better, and save lives, millions and millions, if not tens of millions of lives in the next 7+ years for infinity after that. So that's kind of where we stand with the big picture number. Then we have some certain areas and some certain companies that I want to mention. And these specific companies, I will tell you right now, they're not a buy, they're not a sell, they're not a hold, there's nothing. These are just from different articles I've pulled and researched, and they tend to mention these companies. And these are companies I've come across in my research over time involved in drug discovery and artificial intelligence. So let's take a look here. So it's just recently, Sanofi, which is a very large company, they agreed to pay a company called Exscientia. And this is a company that I came across in 2019, November 2019, in Lisbon, Portugal, at the Web Summit. I was there, obviously doing research, talking to companies, and I ran into this company. One of their executives gave a presentation in one of the breakout sessions, and at the time, it was not publicly traded. Now it is publicly traded here in the United States, and I'll talk about some of the stocks and the symbols at the very end. But they got $100 million up front from Sanofi. And this was because they're paying them really to use their AI technology to research novel medicines and develop up to 15 candidates in the oncology immunology by using all these AI systems. So it's a $100 million upfront payment with the potential up to $5.2 billion in milestone payments. The odds of them getting all those, probably zero. But the point is, these companies are willing to make a bet. $100 million is still a pretty decent sized bet, plus all potential milestone payments as these drugs that they're looking for potentially move down the path to approval. Bayer, Roche and Takeda, which is a Japanese company, they're all working with a company called Recursion Pharmaceuticals. That's symbol RXRX. They're based out of Salt Lake City. Again, for what? To explore drug discovery using machine learning slash AI. But the big companies are looking for these smaller companies to pay, the ones that are experts in the artificial intelligence. Takeda, they bought a experimental drug for psoriasis from a company called Nimble Therapeutics. It's a Boston-based company, and it would be one of the first oral treatments for psoriasis, which about 125 million people worldwide have it. So it's a obviously big need out there. And this drug that they got, and it's currently called TAK 279. Obviously, before they get approval, they have these weird names. Could also potentially be used for Crohn's disease, which is another disease that affects many people. It's already gone through the first two stages of human trials, so it's moving on to the third stage. And there's algorithms that picked the present molecule in about a quarter of the time that it would have taken humans before. So Takeda's taken some of this AI, machine learning, put it together with this potential drug TAK 279, which could be a blockbuster drug if it does come to fruition. It's approved by the FDA. But again, getting there faster, most likely less cheaper, and the odds of it being approved seem pretty damn good as it continues to move along to phase 3 of the FDA trials. So that's another company here that's publicly traded now as well. Takeda is a very large company based out of Japan, as I mentioned. Pfizer, we all know Pfizer. They're looking to do a partnership with DeepMind's AlphaFold, which is a part of Alphabet, which is a part of Google. They want to do that to help the company design and validate therapeutic targets that were previously unknown. So again, big money coming into it. And then there's already been several drugs, folks, that have been identified by these smaller startups, some of these other smaller ones, by using AI, and they're already been moved into human trials. Recursion Pharmaceuticals, I just mentioned, they actually have five drugs right now in human trials that were generated from AI for rare diseases and oncology. There's 3 from Exscientia, the other company I told you about, for cancer and inflammation. There's a smaller company in Citico based out of Hong Kong. They have a candidate out there for mid-stage human trials for pulmonary fibrosis. Then you have GSK, which is a huge UK-based pharmaceutical company. They said they have 160 experts dedicated right now, just 160 just to AI and machine learning for their R&D and manufacturing aspect of the business. So you're seeing a ton of money flying around. You're seeing basically every pharmaceutical company out there has, I'm sure, some ties or some division to artificial intelligence, because if they don't, they're going to get left behind. So let's take a look at charts of a couple of these before we wrap, just to give you an idea of kind of where we stand. And here's the first one, Exscientia, symbol EXAI. And I will tell you, you'll notice in these charts, you can see the bottom, those are the volume spikes. They're the big green ones, big money coming in. As AI has become more popular in the last few months, the healthcare aspect of it has become more popular as well. And you're seeing a lot of money starting to flow into these stocks. Does it mean they're going to continue? No. Are these buy recommendations? Absolutely not. These are very volatile stocks that have moved quite a bit. I mean, Exscientia is up 50% in just the last 2 weeks. So you got to keep that in mind. But there's the chart of it. And honestly, overall, over the last year and a half, the chart's pretty ugly. But again, I just want to show you how they are moving right now. The next one to take a look at is Recursion, which is RXRX. Wow, up big again this morning. This is a stock, again, that's I just mentioned a bunch of different stats about it, but it's up over 100% in the last month. So again, you don't chase stocks like this, but the big volume coming in, and again, this likely doesn't last forever. I just want to show you some of them. Takeda, which is a large pharmaceutical based out of Japan, symbol TAK. We'll take a look at that. That's a much nicer chart, but it's different. This isn't a pure AI play like some of the others are. They're not pure AI plays, but as close as you're going to get in the healthcare industry. Takeda, more of a large, diversified pharmaceutical company. But again, it's got a pretty nice looking chart. I'll tell you that. So it's holding up really well. And there's a few others, but again, very small. I don't want to really get into them too much. Some of them are private as well. But I just wanted to get a quick show out here today and talk to you about the upside here and just throw a couple of big numbers out. It's quite a bit I just did in the last 25 minutes or so, but just know that this is an area that I'm going to continue to do deep dives into, my team and I, probably using some chat GPT for our research. And for our subscribers, it's something that, again, I have believed AI in healthcare were going to be a game changer for many, many years. I've been writing about it for anybody who follows me for many, many years. And I don't think it's going anywhere. And I still think we're in the analogy of baseball, the first inning of a 9 inning game. There's huge upside potential for investors here. You want to make sure you have a diversified portfolio. You want to make sure you do your research. And again, we're doing that for you, for our subscribers. And you'll hear more from us as we dive into this in the coming months, weeks, months, years, really. So, but again, thank you so much for watching, folks. I hope you have a great rest of your Tuesday. I got a good interview coming up here on Thursday with Jim Rickards, talking a little bit of everything, but he's a legend, and we will have him on Thursday, so you don't want to miss that. So have a great rest of your week. Thank you so much for watching. I'm Matt McCall, and that was Making Money.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.